Okay, once again, welcome everyone. Welcome to this meeting, and thanks for attending. So today we'll talk about waves. So some of you will have an idea when we're talking about waves, and some of you won't have an idea. When I mentioned the word waves, in your mind you should think about impulses. So you must think about impulse, correction, and an impulse. That is all we are looking for in the market. And traders, job is not to catch the top or bottom. Let's say the market is going up, 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 up. You don't want to be the first guy who's selling at the top. That is not your job, but your job is to make money at the end of the day. So what I'm referring to is that once if the market was going down, we want to wait for the first impulse against the trend, which is bullish. And then after the impulse, what is going to happen? Obviously, the market is going to pull back. And then after they pull back, there's going to be a continuation. You want to be in that continuation. Based on today's video, let's go to the whiteboard and try to explain what I'm talking about. I hope you can all see the white screen. Can you see the white screen? Can you see my circle and the white screen or not yet?
The one in your background or showing the blue line and the red line? Or...
Okay, hold on. I think I have to share my screen first.
Yeah, share it so that we see it.
All right, give me a moment, please. Here's my pen. Okay. Now, can you see the white background?
Bob, check where you're writing. Check. Unfortunately, we are not seeing. We can see the screen is open, but what you're writing below, what you're writing is hidden. Is okay now. If you write at that level, we can see that level. Yes, there. If you write there, but where you're writing below is screened out from our view. Okay. But where now you have drawn that now, if you write there, you'll be able to see.
All right.
I think it's the margins of the board. Yes.
Okay. I think I know what is happening. Let me try to fix it. Let me try to fix that. I apologize about that. For some reason, okay. Okay, I hope this one will show. Okay, let's do the white screen again. I'm on the white screen now. I'm gonna draw.
Yeah, I think the screen looks wide. Yes, yes.
Yeah,
that looks wide.
Can you see the circle now?
Yes, you can see from head. Go to the head completely so that it will tell you up to how far you can see so that you can write within that.
Okay, can you see the yellow or you only see the black one?
We are seeing only the black one.
Oh, only the black one. Okay. So the black one I've made it half of the screen. Now I'm gonna make it all of the screen. You see all of the screen. You can
see. We can see the black. Good. Now the black is visible. You can remit yourself now to that area where the black was occupying. We'll be able to see.
Okay. Thank you. Thank you. Okay. What I was saying, well, the market is gonna do something like this at some point. Impulse, which is a move that is going in line with the trend, and then it's gonna do a correction, and then it's gonna do an impulse. So our job, let's say the market was going down like this on this yellow side or yellow mark, but then our job is to wait for the market to do this one, which is an impulse. We are doing nothing, which is called impulse, or just write IMP, and then when the market, after the market does this impulse, obviously, here on this side, there's gonna be a trend line here that's gonna get broken. But we are waiting for this impulse. After the impulse, we don't buy instantly. We wait for the correction. So this one is the correction. I'll just write C next to it and highlight with a bit of pink. All right, this one is a correction. The one with blue is an impulse. The one with pink is a correction. And then I'm gonna do a blue again. We wanna catch this one. And I've catch it very successfully in the market, because what's gonna happen, on the yellow side, the daily time frame is going down, or whether the weekly or the monthly. And then on the 4 hours, I like to catch it on the 4 hours, and also the 1 hour can work for you. You're gonna draw your trend line, then you are waiting for the break. After the break, let them do the break and retest, because we know that there are so many trading strategies in the internet teaching us to buy or sell the retest of the broken trend line. So for us, we want to wait for the impulse, the first green, the first blue. I like it in blue. Want to wait for this one, and then after this one, after the correction, sometimes with my trading style that I'm currently trading with, I give you a hint. So sometimes there's gonna be a small pause somewhere here. So that one will be a demand. I hope you're gonna see it. This one is gonna be a demand with my strategy I'm using. But also another thing that you can use to catch that next impulse, which is this one, is to use a Fibonacci. I know many of you know what is a Fibonacci retracement tool. You're gonna drag your tool from this low to this high. So where are you going to buy? You're gonna buy around 50% retracement and 61, 62. I mean, around 50% and 62. If I'm not mistaken, that is where you want to buy.
Hello. Hi, Bob.
See my drawings.
Yes. Now you can come back. Let me check whether the screen. You have lost your screen. Screen.
Oh, I lost my screen. Okay, let me.
Yeah, share again. Share again. So.
Okay, let me reshare it. Let's go back to this one.
Yeah.
Network is something else. You can see it now, right?
Okay, yeah, we are back again there. Okay, quick one as you go back to it again. You had said there, of course, the yellow line is the daily, whatever they again trade, showing that the trade is going down, eh?
Yes.
And then what you have drawn going up in black is like a break of the trade right now here. And you are saying, does it mean that this now is the reversal? The trade has now reversed and is going up now here. This is a reversal.
Yes, exactly. You want to catch the reversal. Now we're trying to catch the reversal, but also this can be used in the continuation of a trend. I will try to show both examples if we're gonna have time. But for the purpose of this example, the yellow one, the yellow one we can say it can be the monthly, weekly, or daily, because if we are trading on the 4-hour time frame and the 1-hour time frame, we want to trade with the trend of the higher time frame. It's very important to keep in line with that trend, because that trend is the one that rules what is happening on the lower time frames. But what I've learned is price is fractal. Whatever is going to happen on the higher time frame start by happening on the lower time frame. What I'm trying to say is, if the trend is about to change, it will first change on the lower time frame. Without the break of a trend line or without the change of structure on the lower time frame, forget that it's going to change on the higher time frame. It is definitely going to still continue in your direction. So as I was saying, that you can use a Fibonacci, which is like this. It's going to have 50% and 68. Is it 61.8? Ne? I think 61.8, but I will confirm on the Fibonacci.
Yes.
So we use only the golden ratio of the Fibonacci to catch this pullback, or we're gonna use a supply and demand. Here I have the notes that is gonna say, I'm gonna ask yourself, is the higher time frame ranging or is the higher time frame trending? Your answer, you're gonna get your answer. Let's remove now the drawings. After asking yourself, is the higher time frame trending or ranging? If this is what happened on the higher time frame, if this is what happened, this is point B on the higher time frame, which is the daily, let's say the weekly. This is the weekly time frame. This is the weekly. So on the weekly, you're gonna ask yourself, is the weekly trending or ranging? If this is what is, if the weekly look like this, let's say the trend, maybe the trend, yeah, maybe the trend was, yeah, but the trend was coming down on the weekly. On the weekly, let's say the trend was coming down like this. You can see my black and pink, right? So if it's looking like this, definitely your answer is gonna be the weekly is ranging. The weekly is ranging until the only confirmation that the weekly is trending up or trending down. You're gonna get your answer if the weekly come like this and break the upside, then the weekly is trending up. Without the weekly going above this line or going below this line, now you can say the weekly is in a downtrend. But as long as the weekly is in between point A and point B, then the weekly time frame is ranging. Okay. Once the trend line is broken, you can no longer say, once that trend line gets broken, now we're gonna go to the live chat in a moment. Once that trend line gets broken, automatically you are not in a bullish trend until, as I've mentioned, until it breaks above point B or above point A. So now let's go to the live chat and implement wave analysis. So I hope to make this session a bit interactive, whereby I'll ask a few examples, like I ask a question from you, then please respond to me. Now I'm going to share the screen for the live chats now. Okay, I hope you can see my screen now, my live chat.
Yeah, we can.
Okay.
Yep.
Let's start with this one. As long as it's the upper one, let's start with the first one, because it's not something that I look at hindsight, but it's something that we are going to look at, all of us. Let's start on the monthly. Apologies about that. So on the monthly, we're going to ask, of course, we're looking for something that is a bit clearer. We're going to ask ourselves now, on the monthly, is this pair in a trend or is it ranging? Me, I'll answer the question for you.
It's ranging.
Because the last impulse is this one. So we're going to be careful on the lower time frame. This is the last impulse. So another thing, an impulse is a strong, sharp move. Keep that in mind. We want to look for a strong, sharp move, and a correction is a move that is choppy, slow, or messy. It can be choppy, slow, or messy. If I want to clarify this one, it's very important. Let me do the writing. If let's say this is an impulse, this one that is going against the trend, is this a correction? Yes, this one is an impulse. This one,
yes.
The first one is an impulse. Is the second one a correction? Yes, the answer is yes, it's a correction, but it's not a type of correction that you want to look for. Okay, what I'm trying to say is, if let's say it's the daily, if this one is a daily, it took for the impulse, it took 6 days for the impulse. The correction, you don't want the correction to take 6 days to come back. Like what I'm trying to say is the correction must be a little bit slower than the impulse. If the impulse takes 6 days, the correction must take at least 8 or 10 or 12 days. I hope you are still with me with that. Okay, so with this chart, it's definitely
we are following you. And also, quick one to interject on that. You've said a very important point.
Yeah.
where you are saying the correction must be able to move a little bit slower because what about if it comes down almost to where the starting point of the others? If you draw the Fibonacci, let's assume that that impulse now here is it goes up to 100. Then when you draw the Fibonacci, the correction comes back almost to 0 to the starting point of the other one.
Okay.
So you dismiss that. Do you dismiss that one as not a correction because it has come to the starting point of the other wave? That means it cannot still be called a correction.
Okay, thanks a lot for your question. It's absolutely a very good question. Okay, this one is still an impulse until, as long as that is not gonna come and close. There's no candle that's gonna break and close the below. Let's say here there was a candle. There was a blue candle here, which is a bearish candle. As long as this candle that is coming is not gonna come and close below that one, that blue one. This one, if it comes and close below this black area, then it's no longer an impulse now. It's 100%. It's more than 100% retracement. So we can no longer look the same way as we're gonna look as the one that's gonna come around 50% or around 60%. So yeah, very good question. I like it. I like that one. So of course, with this one, the monthly is definitely ranging. So we have to be very careful with trading USD Very, very, very careful, because now you can see, as I was saying, it's slow and choppy or messy. Slow, choppy. We don't want to trade in the midst of a pullback. This one is all a pullback. So it will stop being a pullback once it break. Once it break here, then it's gonna change the color. Once it breaks this break line, I'm gonna draw here. Once it break there, or once it break there, then it's gonna stop being a correction. It's gonna be an impulse, which is the one we want to catch. If we were trading based on this monthly, okay, but I will make an example on the lower time frame. So let's look at the weekly quickly and see if we can find an impulse that we want to trade on the lower time frames. So based on this one, we can see that this one is a bit sharp move, but not too sharp, but it's not messy, which is the right one. This one is a little bit slow, but at least acceptable. So there's an impulse correction here on the weekly correction, little bit of correction, and other impulse. So of course, after every other impulse, there has to be a correction. So this one is the start of the correction. Let us go to the lower time frame on the 4-hour to see how we could have capitalized on this after this lower low on the weekly of this chart. Let's check and see. So of course, I will zoom out a little bit. So for you to see exactly what is happening on the market, let's say if any of you on this meeting was going to analyze here, don't do like this, don't do the chart like this and try to analyze, then you will make a mistake. Because based on what you see now, you will see that there's a little bit of up, there's down, now it's going up, let me buy. No, we are making a mistake. Always, sorry about that. Always, before you analyze, make sure you zoom out like this, you see? So now we have zoomed out, we can draw a trend line on the last lower high, 2 lower highs. So we want to draw the trend line on the last 2 lower highs. You see, last 2 lower highs is where you draw your trend line. We're not gonna take the trend line all the way from there at the beginning of this move. But the correct way to draw a trend line is to use the last 2 recent lower highs. So now we zoom back in. Now we understand that this one has been in a very, very strong downtrend. Let's go to the current price. As what I was saying, wait for that break of that trend line. And in this case, what happened? It happened like my friend Charles has asked. that what happened if it comes almost 100%, because this one on this 4 hour, this one is an impulse. It's an impulsive move that broke a trend line. But of course, if it comes almost 100% or 100%, it's still acceptable. There's a demand zone here. There's a demand zone that we could have caught and bought there, but we don't want to go there. So in this case, what can we do to catch a trade using the principle I just shared? In this case, we want to draw a zone where they're at the top, and we want to draw a zone at the beginning of this impulse. So in this case, according to what I just shared now, we do nothing until this market come and break there. We be very patient. We're gonna wait for a pullback somewhere. Then after the market show some weakness, because once it does this, it's gonna show some weakness there and start going down. After we saw that, we're gonna use the Fibonacci retracement tool. We drag from here to where the weakness have started, and then we will buy around 50.61.8. Are you still with me? So
Yeah.
currently, if this chart is gonna continue, it must break here at this top. And otherwise, if it goes there and fail to break, it's still gonna continue. It can still continue going down. If it failed to break the most recent high, it can still continue going down. So in that case, that is all I'm looking for on this chart of what's it, USD CHF. So remember, the goal is one. We look for the impulse on the high time frame, or the correction or the impulse on the high time frames. Not looking for anything else. And then once we get the thing that I say we are looking for, we're gonna go to the lower time frame to look for a trade. So I'm still following, I guess. So let's have a look at another pair.
Yeah.
Maybe this one, GBPUSD, maybe this one can make sense. So what are we buying GBPUSD or selling it? Of course, I have no answer. When I look at here, it's very bullish. What do you do? Even if you're gonna trade the one time frame, you won't go to the higher time frames. If you're gonna look at the chart like this, forget it, my friend. You will never get it right. If you look at chart like this, you will never get it right. You must do this if you are gonna do wave analysis, and then you draw your trend line from the last two impulse to the upside. We have 10 minutes, so we're gonna draw it from this one and this one. So we're gonna throw it there. Of course, this one is still bullish until it can still come here and it's still bullish. When it's around the trend line, it's still bullish, and it's gonna still it still have a chance of going up. So now let's quickly go to the higher time frames, weekly, and see if it's in an impulse or corrective phase. And of course, on the weekly, you won't look at it like this. You must zoom out also on the weekly. Zoom out on the weekly, and we can see from the weekly, it's clear that this one is an impulse. This one was a weak, choppy, and a bit messy. It's a correction. This one was an impulse. So now on the weekly, of course, we're looking at the correction, corrective wave. We're looking at the corrective wave because we're gonna draw our trend line like that, and we're gonna draw another one like that. Are you still with me? So in this case, we know on the weekly that the weekly is in a corrective wave, because the impulsive wave is this one, sharp and strong, but this one that we see now, we see a little bit of slow and messy, kind of messy movement. So right now we can also go to the monthly and see, before we conclude, what we're gonna do on this chart. On the monthly, it's still the same thing. So let's go to the daily. On the daily, we can zoom out as well. On the daily, we have this one as an impulse, there's a correction wave, there's an impulse on the daily. So now we are aware that the daily has shifted from the downtrend to an uptrend. Even though the weekly and the monthly is still on the downtrend, but the daily is already an uptrend. So what do we do in this case? In this case, the daily has already made an impulse and a correction and another impulse. So this kind of impulse, where is it going to end? It's likely going to end at a major area of support or supply and demand. So this is a major area somewhere there. So most likely it's still going to continue and it's going to start reversing when it reaches that major area of supply and demand or support and resistance. So let's have a look. Let's draw our zone of supply there. Our zone is that one of supply. So we are not expecting this one to reverse and continue going down until it reaches those blue lines. Until it reaches those blue lines, we're expecting it to drop from there according to what I've analyzed here. So we're going to go to the 4 hours now, using this knowledge of impulse. On the 4 hours, we know that the daily is up, of course. The daily is up. So if the daily is up, we are waiting for a pullback so that we can get a continuation of the daily. So we got it yesterday. Okay, on the 4 hours, this is an impulse, correction, impulse. So on the 4 hours, let's look for what's it? We can use the Fibonacci. When we draw the Fibonacci, I like to draw it from the body. The market has bounced on 61.8. So right now, I am expecting from here, around here, I am expecting this Euro USD, I mean GBP USD, to start going up, but it's still allowed to break this yellow circle and come around here. As long as it does not come and break here, we are still in an uptrend, so we're still buying. So we're still buying GBP USD. We're still buying GBP USD. So that's all, my friends, I wanted to share today about, so that you must be aware. Let's make an example on this chart. Let's make an example. This one is more like a corrective wave or ranging. Corrective. This is not an impulse. No, we are not looking for a trade. Once you see something like this, not clear, a bit of choppy and a little bit of messy, you are doing nothing, stay away. Once you show something like this, you are staying away. And let's, do you have any questions? So you want a sharp move like this one. You want a sharp move like this one, then we're gonna catch the correction. And then again, we want a sharp move like this, then we're gonna catch a correction. Remember, a correction is allowed to come almost 100%. There's like this here. You could have bought here still after the engulfing, and then you bought, and then you made some profit because it's allowed to come almost 100%. It doesn't have to come to the 61.8. So do you have any question, my friends?
That's very beautiful, beautiful. You can recap again, just the key highlights again from the higher time frame down to the lower time frame. Yeah, okay. Just a recap and then, yeah.
Let's do a recap of it. From the higher time frame, you can start whether on the monthly or weekly. On the weekly, let's say on the monthly, let's say on the monthly, the first thing you do, you zoom out. After zooming out, then you will see exactly what is happening on the monthly. So after zooming out, we can see this one is very sharp move, which means it's an impulse. And then this one is a slow and choppy or almost messy. It's a correction. So there is another sharp move. After a sharp move, there's always going to be a correction. Always mindful. After a strong, sharp move, always expect a correction. So right now, it can be a correction or a reversal. Let's correct that. So this correction can be a start of a new uptrend that will last for years, or it can be a correction it can be a correction for a continuation to go to the downside. So we're looking for something like this on the higher time frame. We see the first impulse sharp move and another sharp move. So we're expecting a corrective move. So we're going to look for a buy, of course, on a lower time frame. Even on the weekly, you can go and try to confirm what you saw on the monthly, which is that sharp move, correction, sharp move. Then it's a correction, this one, as long as it hasn't broken this point. This point is not broken and this low is not broken. But also, based on what I thought, also be mindful, this one is it's a range, of course, until it breaks this previous point A. You can call this one point A, and we are going to call this one point B. This one is still in a range until it breaks there and continue until it breaks below point B and continue down. So then we're going to go to the lower time frame. With the mindset of knowing that on the 4 hour, we know that it's going up, but in a corrective manner. So what are we looking for? We're looking. The first thing we can do, since this one already is in line with the daily, because on the daily we can see impulse, strong move up, and the correction, and a strong move up. So how do we know this one is about to end? We know it because it has hit a major area. Once it hit that major area, then we know it's gonna correct or reverse. So we're still buying this one until, let's go to the 4 hour. On the 4 hours, we can see impulse, correction, impulse. So until it breaks here at this point on the 4 hour, we're still buying in. If it breaks there and close and then make a lower high, but the lower high is only confirmed when this one breaks. This one is point B. This one is point A. Are you still with me? The lower high is going to be confirmed only when the market breaks point B. That's the only time we're going to know that the trend is reversing on the higher time frame. Otherwise, thank you so much for joining. We have less than 1 minute now. Anything you want to say?